What's up, guys? Wanted to come and discuss kind of a topic we get a lot of questions on, and one that is potentially dangerous if you really don't know what you're doing, and that is just IPOs overall. And do we invest in them? Should you invest in them? All these questions. Just want to run over that really quick and kind of give an actual breakdown of what we've done and the approach we've taken. So, for example, this is one of our top performing stocks for our paid watch list this year, guys, Venture Global. And ever since Venture Global IPO'd, we always liked the company. It's a liquefied natural gas LNG company. We've always been very bullish on the energy sector for the long term, guys. LNG could be a big player in that, and Venture Global is kind of like the front runner for that industry. But as you can see, if we would have invested at the IPO, we would have, basically just got rugged all the way down to $7 a share. Now, can you step in at these prices? Sure. But what we always like to do is we like to see buyers start stepping in and where people are starting to buy this stock. And we also like to see beta, the volatility, drop. So the IPO volatility has gone down. You're going to see less of these like 30% intraday moves and all these crazy things. Where if you really don't know what you're doing, you're basically just in the casino. But as you can see, had a great entry on Venture Global. This is a multi-year hold for us, so if it does come back down to these prices, we're not concerned. But when you wait on these, it does allow you for good entries and prevent you from losing massive amounts of money, which is in long-term investing. You're not doing these short-term trades. That's really more of what you're looking for. Like, we also like CoreWeave as a company. We would never suggest someone to buy at these prices. Could it go higher? Maybe. But there's lots of better options out there at this point. It IPO'd in April. We liked the company, but we don't trade IPOs. And look, you miss a big move. Like, okay, if you would have bought here, yeah, you'd be up a lot of money. But still, you stick to your plan. You have a plan that you stick to. And yeah, as you can see, I bet some people sold right here at these prices. But it's not a game that a long-term retail investor should play. And like Webull, guys, we've been not very bullish, but we like what Webull does. It's a broker, it's a fintech company. They have a lot of potential to be a good player in the fintech company for years to come. IPO'd in early April, shot up to $80 a share. 2 days later, if you would have bought at $80 a share, stock's now selling at $34 a share. So yeah, you would have lost over half your money. If you would have held on to it, praying for like some reversal, okay, now it's down at $10 a share. Now, we actually are starting to like Webull at these prices. We haven't put it on our watch list yet, but it is something we may add down the line. But yeah, just like we're saying, IPOs for a long-term investor make absolutely no sense to us. If you like the company, like what we did with Venture Global, give it some time. It IPO'd in January. We didn't buy until actually early June. We've started talking about it around these prices. We didn't actually buy it until these prices, guys. So yeah, that's kind of what our take on IPOs is. We can go further in depth with this down the line, but that's what we wanted to talk about with like real time examples of this year of how we've approached IPOs. Thanks, guys.